Welcome to another episode of Merill Talks, the channel where we discuss everything from the stock market to global economics and how world events affect your investments. With me, as usual, I have Merill Fund Manager Marc-Ellazidi. He has managed money from Switzerland, London, and Malta for the last 2 decades. Welcome, Marc.
Hi, welcome, everyone.
So let me share the disclaimer on the screen for 5 seconds, and I will read it again at the end of the presentation. So let's jump into today's 3 topics on Merill Talks. First, we will discuss Japan and semiconductors, central bank activities related to the Bank of Japan and the Federal Reserve, and lastly, the US consumer discretionary in China. Our last episode of Merill Talks was dedicated to Europe's dilemma. We were basically talking about lagging in tech and innovation compared to the US and Asian countries such as Japan and Korea. Now, if you're a regular follower, you probably watched our macro talks, dedicated to Japan in February. If not, you can easily find it on Rising Sun, Rising Economy, Japan's Economic Revival, and Global Leadership. Marc, your portrait of the Japanese economy highlighted 2 negative catalysts, a terrible demographic and a massive government debt. It was counterbalanced by a dominant sector, semiconductor, compared to Europe, for example. Would you like to talk about this further?
Yes, for sure. Hi, welcome everyone. Yes, I mean, you know, I'm a big fan of Japan, and let me say, last time we portrayed the Japanese economy in the way like one side there is like a lot of negative catalysts, like the demographic and also the politics, and on the other side, it's a great country, especially the workforce are highly dedicated, long hours, 12, 15 hours. And I can speak about this because my personal experience, when I was a young student, and I spent 1 month there in Japan. I was volunteer in the 90s to work in an international workforce. And at that time, I was really, really impressed, I have to say, by this workforce, highly disciplined. Every morning, you can see them working from 7 o'clock in the morning up 11 in the evening, which is incredible. I mean, especially if you have been coming from Europe like me and like you. So I was like very impressed about this. And why I want to discuss about this and why I want to make a transition about this. Taiwan Semiconductors, as we know, is a leader on producing chip, exactly the one you can find on any iPhone or even other phone. I've been investing in Japan heavily, but also in US. As we know, in US, there is Biden is pushing in the funding, try to bring like the federal money into sensitive sectors like semiconductors. And the point is, now, let's see how's the things going in the way. So on one side, we have also Japan who received a lot of money for Taiwan Semiconductor, pushing also in these directions. The point is, we think always US is the right place and everything, which I think. But the point is, the question here is a question of the workforce, the education here. Because as we know in Arizona, there is 2 massive chip manufacturing, one under the control of Intel, one under the control of Taiwan Semiconductors. But the point is, they are lagging big time. This project is lagging big time. Obviously, the US government is really pushing this technology, but at the moment, it's like a little bit stuck somewhere. When in Japan, Taiwan Semiconductors, they're already thinking about a second big manufacturing, which is, at the moment, it's Kumamoto, which is in the south of Japan. I mean, it's fantastic for them because the Japanese workforce is very reactive. So they don't need to train so much the workforce, which is not the case in US because they have a lack of skilled worker. That's really the problem in the US. When in Japan, they don't have it. So I think it's also one of the reasons we should be very confident how the Japan will go and push the semiconductor industry in the front line compared to US, who we can imagine months to come before all this mega factory will go to produce the first most advanced chip, when in Japan it's already the case. So clearly here, I think I will say Japanese ecosystem is pushing more in the directions. And that's why I think it's a question of the workforce, the education, and I think Asian people compared to the American people are more like, okay, let's focus, let's work
More
long hours,
disciplined.
more discipline, working long hours. Yes, that's why, I mean, like I say, when I was in the 90s, a volunteer in Japan, I noticed this, and for me as a European, it was impressive, I would say.
And if we had to look into even the environmental impact of this and how it's affecting this whole situation, what would be your take on it?
Yes, it's good you bring this environmental impact, because I know producing chip, it's consuming a lot of water. And for example, when you try to do this kind of manufacturing, and we know Arizona, it's quite a dry,
yes.
dry things, and it's creating issues. So clearly here, it could be an issue that compared to Japan, when it's an island. So obviously you have an island, it's raining quite often, etc.
Yes.
So you get access more water, etc., etc. So yes, it's also I will say a positive factor in these directions. Now, is the Japanese government pushing on the ecologicals compared to Biden? I mean, we can discuss these things, but yes, definitely it's a good factor here. But my point to summarize here the workforce and why it could be a big boom on the chip making factory in Japan, it's like really the workforce, because the workforce is ready to work. When in US they really need to train them.
So Japanese manufacturers of chip-making tools, including Tokyo Electron, have experienced significant growth. Can you elaborate more on this, please?
I mean, if you see the trajectory of these semiconductors in Japan, it's fantastic. But I think the Japanese stock market is already designed in the direction of technology. And for example, if you know SoftBank, have been selling its exposure on ARM, which is one of the biggest chip maker, and could be a direct competitor of Taiwan Semiconductor. So definitely at the moment there is a high demand, there is a big hype, as we know NVIDIA recently when made the show. And of course Japan is also working on very niche things, because we say, everyone's speaking about NVIDIA, etc., but Japanese chip makers are really specialized on niche, very niche segment, I will say, and of course this high demand on AI will continue.
And we're taking this in consideration after they had quite a slump due to the pandemic. So this is the post-pandemic growth.
Correct.
We're looking into.
Yes. I mean, we at the moment we are like in the market is overreacting, definitely. When it will stop? That's a big question, but I think we are coming. Japan, why it's an interesting market, because a lot of investors for many years didn't like it. I will say it's very similar to the UK market and the domestic market. People didn't like so much to invest in the stocks. Why? Because there is no so much transparency and etc. But I think the previous government of Abe was pushing really in the direction of transparency and be more share value oriented, which was definitely not the case before. I'm saying this like pushing some foreigners in the board on many companies, when the Japanese, they have been quite reluctant at the beginning. But I mean, for me, everything is natural. Why? Because Japan in the 80s was a dominant player in the semiconductors, and I think they have already, I will say, the roots there, and that's why it's just like a resurgence of something which is a part of their DNA. And if you remember, and if you a person like my age, I remember how's the quality of the product coming from Sony. I still own my PlayStation 3 after 13 years.
So if we even consider last year's podcast, we can say that Japan's stock market overall is back. It's flourishing.
It's clearly back. I mean, it was a value play for many years. Like I say, investor not interested so much. And now, clearly, I think, like I said last time, there is a tension, as we know, there's a tension between China and US. And a lot of US investors are thinking, yes, maybe it's better to put my money on a country I can trust, in the way there is no tension with US, and say maybe there is like more like inflow coming to Japanese equities and outflow from the Chinese equity, because one of the popular trade at the moment based on the Bank of America, it's still Chinese equities.
Okay, and I think maybe we can also give thanks to this, to the structural changes that are happening in Japan in regards to the corporate culture.
Correct.
Yes. What are some of the changes that are apparent?
I think, I mean, they are transforming themselves. I mean, again, there is the new generations. I think, like everyone, everywhere, I mean, since pandemic, a lot of things changed. Technology changed. People are changing the way they think. And I think Japan was, even it's an island now with the speed of the information, etc., it has a direct impact, definitely. So we cannot live in the world like we wait like 2, 3, 4, 5 days before the information's coming. So I think the young generation of Japanese, they're also thinking, yes, we need to change, let's go for it. And I think like many other countries, it's probably a time to change, like what happened during the pandemic. Like a lot of professionals being surprised that the retail market is leading the way since pandemic. That's the point.
Okay. And what are some central bank activities that are happening with the Bank of Japan and the Federal Reserve?
Yes. I mean, this week, as we know, we're approaching the end of March. I mean, this week, finally, Bank of Japan took the decision to stop its negative rate. It's a big change. It's clearly a paradigm change. Here, it will create a lot of impact, definitely. Not yet, I will say, not yet here, because, for example, if we see the trajectory of the euro against the Japanese yen, still approaching 165, which is, it's going in contradictions with what's going on. But I think if you are a Japanese investor, and that's the point, for many, actually 3 decades, you have been investing your money outside of Japan because it was making no sense to keep the money in Japan because you didn't earn anything.
So because of the interest rates we're talking about.
Exactly. I mean, typically the famous carry trade. So I think it's a question of inflow and outflow here. So we could witness in the months to come some money being repatriated to Japan. For the moment, the Japanese yen is helping the stock market because, as we know, Japan is quite exported oriented. So with a weak yen, obviously, it's favorable to the stock market. Wait and see if this change of policy will have an impact and the yen will reinforce, which will impact directly the exporter. So I think and it could be a good entry point because here we believe this is a long-term bet. Maybe now it's hot, but like the US market. But maybe if there is tactical things to do, it could offer like an opportunity to enter in this market.
How will the reduction of the capital flow of Japan affect the rest of the world and even Europe or us in that sense?
Yes, definitely. I mean, it will have an impact because we know there is already tensions between US and China. And obviously for the Chinese government, they tend to say maybe we need to reduce the holdings we got in the US treasuries. Now, if the Japanese investors start to say, okay, I don't need to put my money abroad at the moment, because at the moment, for example, you put your money, you are a Japanese investor, you put your money in US, you receive 5%, but the Japanese investor also can say also the same story for European sovereign. What I'm saying, they will receive 3%, and they can say, okay, Japanese, they can say, yes, maybe no, doesn't make sense anymore, which is already the case for the Chinese. So it could have a snowball effect.
Okay.
And that's the point. So really, we have to monitor closely inflows and outflows at the moment, especially the movement of capital of the sovereign bonds.
Okay. And what about the decision that was made by the Federal Reserve this week?
Yes, I mean, actually, Jerome Powell confirmed that he will cut the rate 75 basis points, but he didn't give a clear way and a calendar when it will take place. It will May, June, July.
So there's no indication?
There is no indications. I think what he did, it's like a copycat of what he said in front of the Congress 1 week or 2 weeks ago. I mean, of course, the market was like very enthusiastic because see like a more dovish approach.
Okay, so we're nearing the end of today's episode, and the last topic we have is China and US consumer discretionary and Chinese deflation. So right now we're seeing China's love affair with Apple and Tesla. It's hitting a rocky patch. So can you comment about this? What is your take?
I mean, I know Tesla, especially in China, had the chance to last summer in 2023 to be in Shanghai. And definitely for the Shanghaiese, Tesla, it's an honor. It's really. I was surprised to see the Model I, which is quite the high side of Tesla there, and it's a question of social status. And the Shanghaiese, they love it, but the point is, you have a big competitors, and especially I'm thinking about BYD.
Okay.
Even here in Malta, I mean, no, this morning I was taking my car and in front of me, BYD here, BYD there. I think, as we know in Europe, they are flooding with a lot of electrical car and they are good conception. So I think people, especially the Chinese consumer, with what's going on at the moment and these tensions, and also the government pushing in the directions to buy product, local product. I want to come back also on that side. Why? Because a lot of Westerners have been expecting big stimulus coming from the Chinese government, but the Chinese government think differently and has been very selective the way they push the money where on the, I would say, high-end sectors. So they didn't employ the bazooka style. I'm calling the bazooka because that was the things what happened during COVID took place, and central bank, they have to coordinate and really push a lot of money into the system because we have been like close to the collapse. The Chinese, they have a different approach. I think different because they are, the way they think it's different. They are more like, I would say, scientific in the way. They prefer to put money on a very specific sectors. And these sectors, of course, semiconductors, renewables, and electrical car.
Okay.
And we cannot compete. I mean, Tesla, yes, it's a fantastic car. It was one of the first enter in the market. But now, if you see, for example, BYD, the model they offer, wow, it's fantastic.
And in fact, both companies are seeing a decline in market share in that regard.
I mean, definitely. I mean,
and it's mainly like we can attribute this to the top-down approach that is happening in regards to reducing iPhone usage, and as you said, the increase in like local product like Huawei, as you mentioned. So why do you think they're favoring more domestic brands over foreign ones?
The point is, I think first they start to realize that locally they can find something fantastic. And I can tell you, for example, talking about 4 or 5 years ago in Shanghai, there is a lot of Volkswagen on the street.
Okay.
And for example, Volkswagen is trying to promote the ID3, the ID4, which is the electrical things, and it's definitely not a success. And I can tell you in China, they are not present at all. I didn't see on the street. And it's a big market for Volkswagen. So they clearly, like I say in the previous video, they completely miss this market. And I will say, as a Westerner, sometimes we realize that this fashion effect could have a big impact because suddenly people say, why I will not buy this product which is produced locally. So we are living in a global world, definitely, but a lot of people now say, why I'm not consuming locally. And of course, the Chinese government is pushing in these directions. And also, as you probably recall, I would say 1 or 2 years ago, there is a problem with Tesla because going to the sensitive military place, and the Chinese, they say, no, Tesla cannot enter. So also they are pushing in this direction. If you are Tesla, for example, you are a military person, you want to buy a Tesla, I'm sure you cannot because you are passing to a sensitive area. And as we know, now the cars are more like software or computer on wheels, and they can communicate. So obviously the Chinese are very suspicious how's the thing and how Tesla can spy on sensitive place.
Okay, so we can basically attest to patriotism and government directives.
In the way, yes.
Okay. And we can see that right now Tesla is making a big effort with discounts and incentives, but
Correct.
nonetheless, it's still facing this brutal price war.
For sure.
And what would you think that the tax rate in China is affecting this in that regard?
Yes, definitely there is also an impact of the tax rate, and it will have a huge impact on Tesla, and that's the point. We spoke about this, if you remember, also the tax here in Europe, and why? Because a lot of countries have been saying, okay, you know, we cannot offer you like a discount. For example, here it's 11,000. We cannot offer you this discount if this car is not produced in Europe.
Okay.
So also there is these things, and I think Elon Musk was quite visionary on that side, and that's why he moved the productions directly to Shanghai. So it was like producing locally, not car imported from US. So he was also a visionary. But the problem was also this tax incentive will vanish because, no, like I said, last summer when I was in Shanghai, I was very surprised. I mean, I would say 80 to 90% of the car on the street are hybrid or purely electrical. So there is no any more combustible, maybe 10%. So yes, definitely. And to conclude on that, I think it's difficult for American product now to survive in China in the current environment.
Well, they do have a slowing growth in the demand, but I think the security-related issues and restrictions is shutting them out completely now.
Clearly. And that's why I think as European, we have a chance, especially, I will say, the luxury brands, the French luxury brands and the Italian one, because here there is no equivalent of Louis Vuitton or if you want an Hermes bag, because it's still like a social status, and I think it's more a social status here to stay, because Asian women will still continue to love Louis Vuitton or Hermes, but maybe if they don't want to buy a Tesla and they will buy a BYD, it's not a big change for them. So that's why I say Europe can play a role on that side, because the luxury brand in US was always a discussion. I think consumer discretion in US, it's interesting, but they don't have this legacy we have in Europe with a very strong history.
So now we're going to jump into China's deflation, and the main concern is that it might actually go global.
Yes, I mean, to come back on that side, it's like I say, the Chinese government opt for like putting money on a lot of money on very high tech hand, which, as we know, technology, it's a deflationary effect.
Okay.
And we noticed that, and especially we noticed that on the COVID time, because a lot of people have been predicting inflation, etc., etc. But I think technology is bringing a lot of deflations. And that's why the way the Chinese government is thinking and the way it's allocating money on technology, like I said, renewable, cheap, electrical car, it could create a global deflations because we will improve a lot of things and it's creating deflations. I know we are living in a world of inflation at the moment. It's difficult for the central banks all around the world, especially, for example, the Fed, because they have a resistance at 3. They always think, yes, maybe we are close to 2%. It will be a hard job to break this 3%. But on the other side of the world, deflation could come with a lot of technology and even us on the day-to-day, we have more and more products coming from China who are technology oriented, like a robot who's cleaning your flat, etc., etc. So it's creating a deflationary factors, because if you have your robot cleaning the floor, maybe you don't want to buy this product or this product and this product, and you are spending less money on that side that if you don't have the robot. So clearly technology has a direct impact.
All right, Marc, so we've summarized and talked about many things. And on last thing, what do you think about the Yuan?
The Yuan, I mean, it could create like another commercial war and especially creating more deflations if the Yuan is going further down, like the Yen is doing. And that's the point. So I think we have to monitor closely what's going on in the coming weeks. I will say talking about the trajectory of the Asian currency. I'm talking about here about the Yen, the Japanese Yen, and the Chinese Yuan. because it could create some commercial tensions, knowing that China, Japan are exported countries. And sometimes they are going directly in competition against our product in Europe and also the American product.
Okay. Thank you so much. It was lovely having you here.
Thank you very much to everyone.
Thank you. And that concludes today's episode on Merill Talks. The content of this presentation has been prepared for general guidance and information purposes only. Any information provided throughout the presentation does not constitute financial, investment, professional advice, or recommendations.